Tim, good morning.
Good morning. Nice to see you.
How we doing today?
Well, we're reveling in Denver because the Denver Pioneers are once again, for the ninth time, the collegiate hockey champions, and having once again beat people from Minnesota, which I tell you that makes us feel pretty good.
Okay. Congratulations to the
Well,
Denver,
thank you.
congrats to the Denver Pioneers. So Tim, we got a
Yeah.
question on Twitter over the weekend. We already sort of addressed it, but I'd be curious to get your take. Obviously, a short week this week. Markets close on Friday. Options expiration on Thursday. What are your thoughts regarding that?
Well, and there are a series of expirations. That's important to understand. You know that they take place effectively Wednesday, Thursday. Then you have new options trading next Monday. We always call the Tuesday following the trading of the new series Counterparty Tuesday, because banks will square their books related to the things that expired and the things that began trading. Pardon me. Then you've got all the volatility as an asset class expirations on Wednesday. So all of that is going on with a holiday. And so those periods tend to be more volatile. They do. There's a greater opportunity for traders to speculate on supply demand imbalances in those instruments. Now, can I tell you that that's absolutely going to occur? No, but I think if you're a trader, you should go in clear-eyed and understand that those things are occurring. If you're walking into a river, it would be nice to know that you're about to step in some kind of deep hole and go in over your head right before you do it. So that's kind of the thinking here. And I can't tell you absolutely what will happen. I can tell you this, that between March 14, which is the last options expirations period, that's when it began, SPY was at 417, give or take. So proxy for the S&P 500, and it closed Friday at, call it all the same as 447. And we've had, over the last 20 trading days, 14 of them were up days. That is where there was more buying than selling if you measure how things close relative to midpoint. So we've actually had a very strong stretch here from March to expirations to April, and people forget that. You look at the market and you think, whoa, it's really struggling. Well, it had a very good run. Well, that may mean that it has a difficult time repeating that. I'm not saying that that's going to happen, but broad demand is falling. You look across the market, there's weakness in demand. Investment behavior was down 4% last week. Derivatives demand is flat. So again, I'm not saying that the market is going to take a tumble here. To me, the bigger risk is next week, Monday, Tuesday, when the new series trades. But that's how I think about each of these periods. I always like to look at what's been occurring. Is investment behavior increasing or decreasing into these events? And to beware that as a trader, it's a very challenging period. You can get caught out in these stretches. Dennis, you may have additional thoughts on that.
Those are you said it perfectly. I mean, this is, you've got to be careful in this environment. And the one thing I keep saying is if you're chasing moves in this environment, you're losing money. Because this is, like you think about all the big headlines from last week, and you obviously look at Twitter and, blasting off on the Elon Musk when we were talking last Monday about this. Well, now it's come, and ran for 2 days up to almost $55. Now it's turned around, it's $44, and it looks like it's giving it all back. And then, go 2 days ago, and the big headline, Warren Buffett, Hewlett Packard, 41. They're all pump, CNBC. They're talking nonstop about Warren Buffett and Hewlett Packard. And now the leakage is starting. It just seems like when we get these big gains, the leakage follows. There's no follow through. It's like there's no follow through in this market, at least for the bulls.
And Joel, you pointed out this in market structure for Twitter last week. You looked at it and said, "Oh, look at the supply side; it's way up. So unless something changes, Twitter is going to go down." Well, you were correct. If demand hits a ceiling and supply increases, it doesn't matter who just bought $3 billion worth of it. The price is going to go down.
That's fair.
It's a tough environment. So how do we identify a turn? And this is what everybody keeps asking, is this the bottom? Right. Is this the bottom? Is this the turn? I mean, it's a dangerous, tough strategy there, but is there some secret sauce for us to look at to identify when there is a potential turn in sentiment here, or is it just buying market structure edge?
Well, I always look at two things. So let me share my screen here, and the first and biggest to me is broad sentiment, that you always want to be aware of the overall demand in the equity market. And you could pick a proxy, and there are different ways to do this. You could look at fund flows. There are a variety of things that one can do. I prefer, because I'm biased, toward our own technology, we like to measure the waxing and waning of supply and demand. And it will tell you before the market goes down. Demand has to first stall and begin to fall before stocks begin to weaken. It's a basic principle in economics. It gets to a monetary policy point. One of the problems today, when the central banks constantly jack with the value of currencies, is it's very difficult for businesses and consumers to understand supply-demand balances. And then we get caught out with, you can't get a Bosch dishwasher for a year. I know, because we're in the market for one, and you can't get one. Those supply-demand imbalances vanish behind currency policy. Well, fortunately, in the stock market, no central bank yet has been able to jack with it and screw that up. So we can see this. Here's broad demand. And first of all, the first thing I do is look at the short term. I just want to know over the last, this is 90 trading days, I think. And I want to know what happens at the short-term peaks. Here's a peak, market went down. Green part is demand. Purple part is the price of SPY. Demand peaked, prices went down. Demand peaked, prices went down. Demand peaked, prices are going down. The only reason they haven't fallen harder is because supply is below trend here. But look at the trend line. These are not great conditions. I would look at this and say, well, it could turn around, but the bias in this data is not to the upside, it's to the downside. And then behind the scenes, I like to go look at the broader data. And this is really sort of like inscrutable. I realize that, so I'm only going to show you one thing in here. This is data all the way back to 2012.
Whoa.
And it's looking at the 90-day rolling average of demand relative to SPY. And all you have to know is that every time it sags, there is a drop in the market. And the fact that these converge, SPY and demand.
Wait, Tim, can you, whatever this screen is, can you stop sharing that and go back to where you were before? Because your audio, as soon as you brought that screen up, your audio just kind of conked down on us a little bit.
Died. How's that?
Oh, weird. Here, I'm just going to take your screen off. I think your audio is doing some weird things. They're very bizarre. Now it's better.
All right. Is it better?
It was like the records when you put the records on the wrong speed. Like when you put the LPs on the right?
Yeah, that's what it was. That's what it sounded like. That's weird. Anyway, you sound good now. So
maybe we could play it backwards.
Just describe just describe to us what that chart said without having it up on the screen.
So the core takeaway is that if the rolling read on demand weakens, that the market has always gone down, and that's where we are. So to simplify this, the first thing I do is look at broad sentiment and a shorter period, because it's a short-term market, and for this purpose, I'm a shorter-term trader. Right. And then number two, I want to know what the propensities are historically when similar conditions exist. And there's no question that these are not great data. Once again, something could change the outcome, but that's how I think about it. So then what do you do in those circumstances? Well, you want to always bias your trading toward things with a propensity to rise as opposed to fall. And that's not that hard. You can see where the money is going. So I pointed out Dominion last time. The utilities have done well. Right. Certain energy stocks have done well. And I want to show you how to rotate from one thing to another. So here's Dominion. So, pardon me, if you pollens are out here in Denver, it was 77 degrees on Saturday. So here's the price of Dominion and the demand and the supply. Now I look at this and say, all right, well, that may have run its course. Is there something else that I could rotate to? Well, yeah. So just pick another one where the money is. Let's take Ameren, St. Louis company, and there's a better supply-demand balance. So all I have to do is sell Dominion and put my money to work in Ameren with very strong demand and falling supply because it's more likely to give me a return. Those are the kind of things that you can do in any market. Just go where the money is, but don't go try to buy NVIDIA or the FANGs or things like that when broad sentiment is falling, because remember, tech is half the market. If you add up tech, consumer discretionary, communication services. That's how I think about it.
Awesome. So my biggest takeaway here is you're mostly just focused on the start of next week once we get this new option cycle, and then it's all sort of up in the air until then. But that's you is really where the opportunity may be, or that will tell us more than this week will.
If the market is down this week, it's because there's weak demand for derivatives and investment behavior has declined. If it does fine, it's because people bought 5-day out of the money calls back on Thursday, which was a pretty good day, and they're chasing prices up into expirations. Either way, you can get caught, people. Just realize that no matter what you hear on the headlines from CNBC or elsewhere, no offense to our friends at CNBC, that the market will not reflect macroeconomics, interest rates, blah, blah, blah. It will reflect short-term speculation on expiring and renewed derivatives. That's what's going to drive the market the next week. Yep.
Tim Quast runs Market Structure Edge. There is a link to sign up for that in the description of this video. Also put it up on the screen right now. There it is. Tim, always a pleasure.
Tim, no SAT words today.
I thought about adding prodromal to it because that's the development of a medical condition between its first initiation and when it becomes a full-blown rash, and that's kind of a pretty good description of the market.
Name of if we were in the spelling bee, it'd be like origin, and then they'd be on the back of the card.
That's right.
Like doing that.
Hey, I should say, guys, I am out next week, and because I'm headed back to the Cerulean Sea. There's another vocabulary word for you. We're off to stay.
Where is the Cerulean Sea?
I'm Googling it.
Where is this?
Cerulean is a word that means blue-green, right? So it's the Caribbean. So we're headed to St. Martin, St. Bart's, and Anguilla. And so we're leaving Wednesday, and we'll be back the 23rd, I think the 23rd. So I will miss you next month.
Oh, we want you to do it from the boat.
Cerulean, like CER.
Can't you do it from the cruise?
CER.
Your cabin.
CERULEAN. I wish we could. It's unpredictable. If we could. It
would be awesome. We want to see you on the cruise.
Right. If it's possible, I'll drop a note. If it's possible, we'll do it because that would be good.
We live vicariously through you, Tim. We really do.
Would you leave Tim alone?
Tim, I don't get out, Joel. I don't even leave the house. There's snow outside right now. I gotta live vicariously through this guy. So this is important to me.
Dennis, why
I haven't went anywhere in 2 years.
Dennis, why aren't you in the metaverse? Why don't go get your Oculus goggles?
I would actually be a good candidate for the metaverse. There you go. It's true, actually. I should go. Maybe I should, and then I'll turn bullish on all these metaverse stocks.
All right. Well, Tim, we'll catch you in a couple weeks. Enjoy this Cerulean Sea.
Thank you.
We'll see you.
See you on the other side.